Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. As a technician, as a technical analyst, there are things that we can do today that we were not able to do 50 years ago. And a lot of that simply has to do with computer technology, the advancements in technology that we've seen. For example, price chart here utilizing the wave principle. Here we have price charts utilizing more computerized technical studies, indicators and oscillators. We have MACD histogram, moving averages. And then we also have RSI, rate of change, and we can even get more complex. Like for example, here's some computer work that I do for myself, different codes and indicators and all kinds of math and custom programming. The reason I'm showing you these charts is simply to show you that sometimes what we tend to forget is the old school stuff, the things that technical analysis were originally based on, chart patterns and trend lines, being able to interpret or read a chart, that's actually kind of becoming a lost skill or a lost art. And actually in today's Elliott Wave Junctures, I want to talk a little bit about just taking all the window dressing off, taking away the indicators and oscillators, and simply looking at a price chart and nothing else. And what I'm going to do initially is I'm going to show you a price chart of corn. Now, where's support in this market? It's very simple to actually identify support without utilizing a moving average or a trend line or Fibonacci or any other types of ancillary tools by simply looking at the market and see that this area right here in corn, for a long time now, $6 a bushel roughly, has provided very stiff, very solid support for the market. Every time corn has fallen to say $6 a bushel, that or near that area, we've seen sizable moves to the upside. Well, what you can do simply is just with a trend line, draw trend lines here, and you can begin to kind of zero in a little bit more specifically on what this area of support actually is. Support is simply an area where buyers begin to overwhelm sellers and prices begin moving up. Resistance is simply an area where sellers begin to overwhelm buyers and prices begin to drop. Now, these areas, which I call natural support or natural resistance, the reason I call them natural is because these are the levels that the market actually picks. These are not derived from, say, Fibonacci ratios or trendline type work or even moving averages. That's why I tend to refer to these levels or numbers as natural resistance. One of the best ways to utilize these areas here on a price chart is to look for a reversal in function. And what I mean by that is whenever support becomes resistance or resistance becomes support, it tends to be a very solid indication of a trend change in a particular market. For example, if we go ahead and pull over another price chart, this is a price chart that was the corn, that's $6 a bushel, and I'm just simply illustrating how this area here has provided a very solid shelf of support in this market for quite a while. Well, here's an example of a price chart of wheat, where here and back in July 2011, we had a little bit of an area here around, I believe it was about $7.15 a bushel, that provided support. The market came down and on two occasions reversed up from that area. So this was a nice area of support. Well, what happened subsequently in the subsequent months is we actually fell below that area, and then that area began to act as resistance. Here, the 715 handle provided support. A few months later, that 715 handle acted as resistance. That's a good, solid indication of a trend change. Also, too, we can add a little bit of a trading perspective to this and look for what I call a pullback. And it's not what I call it, it's what technicians refer to a retest of, say, a trend line or a support area. In a downtrending market, it's referred to as a pullback. In an uptrending market, it would be referred to as a throwback. So in this instance here, one of the good setups that we would be looking for as we move forward in time, and let me just kind of clean this price chart up, is that since this area has acted as support for so many months now, essentially what I'm looking for is for now this area to act as resistance, and that's going to be kind of the sweet spot, and that's going to be the confirmation point of a significant trend change in this market, and that'll be corn. Now with respect to wheat over here, we can essentially do the same thing. What we identified, or the technique that we have actually applied over here, of simply observing the price chart without any fancy indicators or oscillators or really even trend lines for that matter, and we're simply drawing horizontal lines at this point, simply going sideways to the right, And you can see that there's been a shelf of support in this market here that's again held for some time. Well, we've recently penetrated that area, so of course, what am I going to be looking for? I now want that area to act as resistance, thereby confirming that the larger trend in this market is still to the downside. Now, these are daily price charts, and these are of the grains, but this also works for other markets as well. For example, here's the S&P E-mini contract on the 120-minute time frame. Well, we had ran into a little bit of consolidation last week, but again, look what the market did. And I don't have any indicators or oscillators or even wave patterns identified at this point. I'm simply identifying the natural support in this market. And what we can actually see here is there was a shelf of support that held the market up roughly about this area right here. So what I want to see now is for this area to, number one, give way, which it recently has, and maybe a small pullback back into that area. I want to see that support, that shelf of support, now act as resistance, and that should give way to further decline. Another example is, I think, clearly evident in the Euro-CAD. This is a cross rate. And again, this is exactly what I'm talking about. Notice this low in the market here. That low actually was tested again later on in September of 2011 right here. So this was a nice area of support here, say roughly 134, 135. This handle right here acted as a nice area of support because that's where the market went to and then reversed from. So where we fell to and then reversed from. Then we had the break over here in December. Now look what happened. That area, that shelf of support, now has acted as resistance. Thus the trend change. We can also do the same thing again on a shorter term time frame by simply again drawing our horizontal lines to the right and identifying a nice shelf of support, which has basically kept this market up for, say, the last 6 months. What do we now need to see? Well, we need to see basically a break of that area, and then for that area, that shelf of support, to act as resistance. That's how the market actually tells you the trend has indeed changed, without getting complicated and fancy. Very simple stuff. Chart reading, I hope, is not a lost art at this point. There's a lot of things you can learn by simply sitting back and observing price action with nothing else. And that's it. Thank you very much.